Good morning, all. Just before starting the webinar, a quick disclaimer from my side that the stock ideas and the businesses that we'll be going to discuss through the webinar. So these are just for the educational purpose, and please don't consider that as an investment advice. Do your own research before investing in the companies or consult your financial investment advisor. So before starting the webinar, just take you through the sequence of events that we'll be discussing. So I'll be discussing about the brief overview of the company and the financial matrices, and then my colleague Vijay will be discussing about key investment theses and some of the key risks associated with the company. Right. So starting with the brief overview of the company, Prabhu, if you can just. Yeah, just give me a moment. Just to quickly take you through the company, right? So basically, Go Fashion is one of the largest women wear brand in the country, and it's also one of the fastest growing brand, right? So the listed history of the company is even less than a year now, right? Company is going to complete a year on November 30th, listed on the exchange. But if you look at the track record, so it has a more than a decade of track record of executing the business successfully, right? So mainly company operates on a COCO model, which is company owned, company operated franchisee store model. So mainly it likes to get into the details of right from designing to the procurement to manufacturing and also the retailing of the business, retailing of the products. So mainly for designing, it has a 10-member strong team which works on the different SKUs, right? And if you look at the wide variety that it presents to the customer, so mainly it has more than 50 designs available across 120 different colors, right? And if you look at the total SKUs that the company has, so mainly company is currently manufacturing around 3,000 SKUs, right? Which is a wide variety of products available in the segment. And for manufacturing of these SKUs, so mainly it has tie up with some of the top-notch suppliers and the manufacturers of the product. So mainly it has currently around 81 suppliers and 49 job workers, which are spread across 11 states and union territories, which helps the company to manufacture the world-class product to be made available to the clients. Now, to take it to the finally to the customers. So mainly it operates on 4 different channels, right? So the key channel is the EBO, which is the exclusive brand outlet through which the company does most of its sales. And the second one is LFS, which is large format stores, right? So mainly these are the 2 channels which help us to register the company more than 90% of the sales. And it has substantial presence in the southern part of the country and the western part of the country, and also growing its footprint in the northern and the eastern part of the country. So it has the stores in all the 31 states and union territories. It's just that the company is very strong from where it has originated, which is the southern part, and where most of the affluent community lives, which is the western part, right? So mainly the company has these 2 strongholds in under it. So if you talk about the main differentiator for the company, so mainly it is trying to deliver the best quality branded wear, bottom branded wear for women at a very reasonable price, right? So if you look at the pricing, it has the average selling price of the product is around 750 rupees, and if you look at the most of the sale that it does, so around 85% of the product that the company sold has the average selling price, or the selling price is less than 1,000 rupees. So that's how the company differentiates itself from the competitors and basically does its business. So I'll just like to take you through the some of the key milestones associated with the company. If you can just move to the next slide, Prabhu. Yeah, thank you. So if you look at the key milestones for the company. So the company has a decade of experience in running the business, but even before that, right, the promoter has a rich experience of running the manufacturing apparel manufacturing business. So they have more than 2 decades of manufacturing experience before starting the company, and that's why they precisely decided not to get into the manufacturing side of the business, because they know the limitations attached when you get into the apparel manufacturing, right? Rather they try to focus on designing and retailing of the product, right? So then finally they started in 2010, they incorporated the company, and then in 2011 they set up the first kiosk in a mall in Tamil Nadu, right, where they started selling the product. And finally, because of the huge growth in the in the sales, the private equity player Sequoia also did some funding round in 2014, and they also set up the first store in Chennai in 2014. And then from there on, the store count reaches to 400 in next 4 years. So by 2018, the another P round came in terms of India Advantage Fund Series 4, and also there is some capital, and expanded the store count to 400 in 2020. And then finally, to give the exit to the private equity players and also to raise cash for further store expansion, they decided to go for the IPO in 2021, which was a blockbuster IPO, oversubscribed by 120 135 times at that point of time. And the company finally managed to raise a cash of around 120 135 cr from the IPO, which it intends to deploy to meet the working capital requirements, and mostly to the EBO expansion side. So mainly the company is trying to open at least 130 to 135 stores in the coming year, right? And the company is well on track of utilizing the cash that it has raised. And if you look at the first half of this current financial year, the company has already opened 66 new stores, and is has managed to open more than 500 stores till now, right? So this has been a quick background of the company. My colleague Vijay will later will discuss about the growth prospects. But till then, I'll just try to discuss quickly about some of the channels through which it does the business, right? So mainly how the company is doing its business. So Ravi, if you can just move to the next slide, please. Yeah. So so coming to the business channels, right? So mainly the company is into retailing, and retailing it does through the main four business channels. So the first is the EBO, right, which is the exclusive brand outlet, which currently constitutes around 75% of the sales. So mainly if you look at the EBO share 3 years back, before COVID, it was around 65%, but that's a very high margin business. If you look at the margin from the EBO segment, it's currently at around 68%. If you look at the overall gross profit of the business, it's around 60%, right? So because the high the profit that the company is generating on the EBO side, it tries to mainly expand the EBO segment, and currently now it's roughly around 75% of the overall sales mix. The second most important segment is the LFS, right? So again, it's not as highly profitable as EBO business, but it helps the company in getting the mind share, right? And improving the brand recall and brand visibility, right? So through the LFS segment, basically it set up a store inside, let's say, stores like franchises like Reliance Retail, Globus, or Spencer. So mainly it helps the company to improve the brand visibility and recognition, and from there on, the client moves to the EBO side, right? So this is the strategy the company has employed to improve the brand recall and visibility. So if you look at currently, the most of the EBOs that are located, so it's mostly in the western and southern part of the country, as you can see from the map here, right? So around 50% split is there in the western part of the country between the EBO and the LFS, but it's highly skewed in the rest part of the country, right? So let's say, for example, in the eastern part, company has very few EBO stores, but a large number of LFS stores, right? Presence of the LFS stores, mainly because the company is still into developing the market there. And once the people will start recognizing the Go Colors brand, so maybe they will come up with the new EBO stores. So basically, how they go about expanding the brand in a geography, so they follow a cluster approach. So how they go about is that they mainly identify the top 8 cities where they want to expand, right? And then they set up multiple stores there in that city. So basically, let's say the customer moves from first store to second store to third store to fourth store. So that will keep on improving the brand recall for the customer. And finally, when it moves to the 7th or 8th store, the company has already registered a huge brand recall in the customer's mind. And then there it will try to deliver the product at the best possible pricing, right? So the branded product at the best possible prices. So this is the strategy the company has employed. And mainly currently it has 2 warehouses to fulfill the needs for the retail, to fulfill the supply chain needs for meeting the retail touch points. So mainly it has one warehouse in Thrissur in Tamil Nadu, which is a 99,000 square feet warehouse, which is the biggest in the country. And the second one is in Bhiwandi, right, Maharashtra, where it has a 12,000 square feet warehouse through which it supplies to the northern and the eastern part of the country, right? So basically, if you look at the split, so the third part is the online, which is again a very upcoming and promising part, especially post the pandemic. So earlier it used to have a very minor share of less than 1% pre pandemic, but the company recognized the need to go online as well, because the stores were few of the stores got closed during the COVID. So now the company is putting a lot of effort and doing a lot of branding exercise also, right, to improve the online presence of the company. And that's why if you look at, like, the company has registered around 84% growth in the online sales over last year. So the idea is to take the both the high margin business of EBO and online to at least 85 to 90% in the next 2 to 3 years, which will again improve the overall business metrics, right, in terms of margins and revenue. So that was on the channel mix that the company is currently employing. So if you can just move to the next slide, please. Yeah. So now let's understand the key differentiator for the company. So mainly, if you look at the Go Colors, so it has a wide presence across the segments, right? So it's present in ethnic to western wear to athleisure to denim to fusion. It has a presence across the segment, right? And again, the SKUs that are available for the company Go Colors, it's again compatible with respect to the best of the peers in the industry, right? So it has all the SKUs available across the segment, and that what sets it apart, right? So basically, it's into the manufacturing of everyday wear, right? So the client keeps coming back to the company, and again, they have made the pricing such that it's not very heavy on the pocket for the customers also, right? So that's what sets it apart. That, like, it's trying to deliver the best of the quality at a very reasonable price. And again, talking about the growth prospect for the company, so the entire women wear like this market is divided into unorganized and organized, right? So the unorganized share is currently around 65%, and the organized share is just around 35%. But if you look at the growth in the organized with respect to the unorganized, so mainly there is a shift that's happening from the sari to the two-piece wear in the women apparel side. So mainly that has led to the growth from unorganized to organized, and the organized is expected to grow by 25% over next 3 years, right? So again, it has a very minor share in the organized space, which is just around 8%. So the company has the capability to grow its market share in organized space from 8 to, let's say, 10 or 12%. And again, the market itself, the organized market itself, is going to grow at around 24%. So that's why the growth prospect seems very reasonable and sound for the company at current standpoint. So if we can just move to the next slide, please, we can discuss about the product available to the clients. Yeah. So mainly, like, you can see that the company has a lot of products across segments, right? But the key thing is that it has the range, which is, like, it has the range right from 600 rupees to 1400 rupees, right? So it has all the ranges available across the segment, right? And that's why, like, if the company has to move from, let's say, top 8 cities to let's say tier 2 city. So normally what we have seen that whenever a large brand moves from top 8 cities where the per capita income is higher and the purchasing power is higher, right? The spending capacity is higher. There is a erosion in the average sales per store, right? When it moves from top 8 cities to tier 2 cities. But the company is very confident that, like, even if it moves from, let's say, top 8 cities or tier 1 cities to tier 2 or tier 3 cities, there will not be much erosion in the average sales per store that the company is doing. So for example, the company is doing a fully matured store of the company is doing currently around 80 to 90 lakhs rupees sales a year, right? So the company is expected to, like, do the similar kind of sales in the tier 2 and tier 3 cities also when it moves to those cities, to those geographies, right? So if you can just move to the next slide, we can just discuss about the key strengths that separates the company. Yeah. So mainly the key strengths are the company has a very solid design team in place, and again, since it has a wide experience of dealing in the manufacturing side of the business, plus, like, now in the retailing side, so it has a pan-India presence of very good manufacturers which can supply the product at a very competitive pricing. And again, like, the supply chain is again one of the key strong points for the company, and it has managed to establish the supply chain in such a way that every store throughout the country can be, like, can be supplied with a product in the 8 days of time span, right? So it doesn't take for the company to take more than 8 days to fulfill the inventory level at a particular store level. Right. And again, if you look at the profitability of the business, so just to give you some idea, it takes around 35 to 38 lakhs to set up a EBO, and it has a payback period of 15 to 18 months. And after 2 years, the store becomes fully functional and start to generate 70 to 80 lakhs kind of revenue per year, right? So this is the turnaround, payback period that the business has. So this shows that the business is very solid brand recall. Even we have seen that post COVID also, when the sales dipped in first quarter of 2021, the entire sales got reversed back in 2020, the next quarter of 2021, which is the September quarter, right, which is seasonally weak quarter, but again the sales come back. So this kind of brand recall the company has. And again, with 3,000 SKUs, the company presenting it to the customers, it has wide variety and wide choose for the everyday wear need for the women out there, right? So these are a few key strengths which sets the company apart. Now let's move forward and look at some of the financial highlights for the company. Yeah. So if you look at the numbers, right? So basically, there was we can see some of the dip in the year FY21, mainly because of the COVID. But if I just to give you some reference points, so between FY17 to FY20, the company was managed to grow the revenue by 30% CAGR and PAT by 50% CAGR. And if you look at the current last 18 months track record, so the company has managed to do exactly the same thing, right? Even the same store sales growth, which was earlier at around 12%, so company is registering the similar kind of same sales store growth at around 10-12%. And if you look at the long-term margins guidance from the company, so it's stable at around 30 to 32%, right? So there is a seasonality involved, right, in the business. So for 2 quarters, because of the discounting and all, the margins dipped a bit. But if you look at the peak margin, so that will be or the average margin, that will remain in the range of 30 to 32%. Now moving on to the next slide. Yeah. So if we look at the ROC levels, so basically pre-COVID also the company was doing a ROC of 16 to 18%, and there was a dip in the ROC mainly because the business suffered in the COVID. But if you look at the current last H1 numbers, so the ROC has again rebounded to the 18% mark. And if you look at the debt to equity level, so that has again come down substantially from 0.8 to 2.57. So that helps the company to save on the interest cost in this high interest rate environment, right? And again, if you look at the funding needs of the company, so the currently company is well funded. It has around 135 CR on the balance sheet for the store expansion. So the plan is to the further store expansion will be met by the internal accruals plus the proceed that the company has generated from the IPO. So there is no as such plan to raise any debt by the company or do any sort of equity dilution going forward. So the current company is well capitalized for at least next 3-4 years. And also the idea is to move the average selling price from 750 currently to, let's say 800, 900 and maybe 1000 2-3 years down the line. So basically there will be 3 growth leaders for the company that my colleague Vijay will discuss with you in detail. So over to you, Vijay, now, and thank you from my side.
Yeah, thank you, Prabhat, for taking us through the initial details on the Go Color side and how the business is positioned. So now I would mainly discuss about why we are optimistic about the business story of the Go Colors as a company, and how do we have arrived to the conclusion that it can create a large profit pool for the shareholder side as well. So start with the industry side. So if we look at the women bottom-wear industry in the India, so it's somewhere around 135 billion, which is 13,500 crore as of FY20, and it is expected to grow to almost around 243 billion, which is 24,000 crore in the 5-year period. Okay, the interesting thing that we have to look at in the market side is the majority of the market is the unbranded one. If we look at the right side of the chart where we have highlighted the unbranded and branded portion. So as of FY20, 91 billion is the unbranded market, which is somewhere around 66%, and only 33% is the branded market. And if we look the shift which is going to happen because of professional woman coming to the woman moving to the professional side, and also the trend of shifting from traditional dresses to the two-piece wearing side in the mainly the office environments. So the shift will continue and push the 45 billion branded market share to almost 114 billion. So it's almost a 20% CAGR for the 5 years. Versus if we look at the unbranded portion, so it will be growing at almost 7.5% in the next 5 years, almost reaching to the 131 billion. So two key things about the industry side, we have to look at the industry is a growing market, and the branded portion where Go Color is operating, it has a huge tailwind in terms of coming from the consumer preference side and consumer behavior changing, and also the branded portion, which is basically only 33%. So it will almost reach 45-46% in the next 5 years. So for any company to generate higher profit and compound wealth, even from the shareholders, the first and foremost requirement is the large addressable market. If the market is big and the market is growing, so normally the company which operate in such industry will have better probability of generating high cash flows, high return on capital employed, high profit. In turn, it will also result in the higher share price appreciation. So the first and foremost ingredient of large addressable market is present in the woven bottom wear market. And if we look at the relative share which Go Color has as of FY20, it's almost around 8%. So just to clarify, the 8% is the part of branded one. If we look at on the complete side, let's say if we talk about the branded plus unbranded, so it's around 135 billion. And if we look at the 4 billion sales of FY20 for the Go Colors, so at overall level, it is on hardly 3.5 to 4% market share on the total addressable market. So there is a long track record, long road ahead for the Go Colors to capture additional market share, and there will be no stagnation even for the decade, in our opinion, to grow at a 20% CAGR in terms of industry as well. So now we are very clear, the industry is very attractive. Industry has a inherent tailwind of shift happening from the consumer side, from moving to the two-piece wear, and also the branded people are preferring more. Now we will look at the which kind of business model or which kind of strategy that Go Color is deploying to win the industry. So if we look at the various kind of retail store which are operated across the globe, so there are various kinds of retail store format. Mainly it can be ranging from almost 150 square feet format size to almost 40,000 square feet, 50,000 square feet. So across whole this spectrum of various size of store size, Go Color has identified an attractive segment which is optimum for 400 to 500 square feet size. And their average selling price is somewhere around 700 rupees to make it affordable, even giving the branded product at a very reasonable price. And if we look at the investment, because of the lower store size, the investment is hardly 37 lakhs rupees. And if we compare with the some of the industry, so they can be somewhere around 50 lakhs to even going up to the 1.5 to 2 crore per store setup, depending on the various store format. And payback period is around 15 to 18 months, which is quite decent if we compare with the industry peers. And the average revenue when the store matures or normally around 12 to 18 months, we can see the revenue coming around 90 or 85 lakh odd, the broad range, and the current presence is around 133 cities. So the main idea that we have to take from this strong business model is the company has highlighted the business model which can generate the second highest square feet revenue per square feet. So normally in retail industry, to check the efficiency of the any retail player, normally what we do is we track the revenue per square feet model. So basically it shows us that how the even the company has 40,000 square feet showroom, or let's say the another company has 500 square feet showroom. So which one is more profitable or which one is efficient? So what we do, we take the per store sales and divide it by the store area. So it gives us the revenue per square feet. So if we look at the Go Colors revenue per square feet, so for the year, it is around 40,000 rupees per square feet per store. So it clearly shows us that the company is quite efficient, and the only only one brand has more than high revenue per square feet than the Go Colors. So even being a very small player, only present in the women bottom wear market, which is again only 8% of the total women apparel market, the Go Colors has become the second most efficient player in just 8 years of EBO track record history. So that is a very it shows the success of the business model. And also if we look at the product demand, which Go Colors mainly caters to, so the product demand is quite consistent because it's a more of a core brand, and it has no seasonality. Of course, there is some seasonality which is involved due to the festival demand in India and festival season. Mainly in the Q3 side, we will have the robust quarter and some kind of EO end of season sales happening in the quarter to quarter. So there will be some seasonality, but the demand remains very consistent. So it's not like a wedding apparel market where the demand is mostly concentrated around the wedding period. Mainly, if we talk about the December and January, can be a very solid wedding period. But Go Colors has a very consistent demand. Because of that, it can sell its product at a lower discount. And if we look at the bar chart that we have highlighted, so it is able to sell the 96% of the products at a full price sales. So it is only giving discount essentially on the 4% of the goods or 4% of the apparels which is sells. So it shows the inherent characteristic that why the product demand needs to be consistent, so that it can help any company like Go Colors in this case to offer low discount and in turn get a higher full sales. Just in this case, it is going to get around 96%. So now we have understood like the business model is finalized and already proven in terms of market for the Go Colors. Now we will dwell into the execution track record, because even if we have good industry, even if we have identified the right business model, still the execution capability and execution track record remains a very challenging path. So in this slide, we have basically captured how the Go Colors has been able to grow its store from almost one in 2014 to 569 EBO stores if we look at the today. But if we look at the year journey, so there is no easy journey. So as we can see, it had a very solid growth till FY19 and FY20, where it added almost 115 stores each year. But during the COVID time, it started adding only net addition was only one store. But for us to understand how the business model is strong and how the business model is profitable, we need to look at also the ability to recover of the business model. So quickly in FY22, they again launched 54 new stores, closed some of the non-performing stores, and moving on to the FY23, right? So in the just 6 months, which was completed till September of this 2022 year, so the company has opened 66 EBO stores with 0 store closing. So it clearly shows the annual store that will be opening will be somewhere around 120 to 130, and it will be moving on to the previous growth trajectory which Go Color was doing before the COVID time. And if we look at the cities that Go Color is adding on year by year basis, so normally it used to add around 20 cities because it was capturing the market, and now Go Color has managed to reach around 133 cities, and they are planning to add around 8 to 10 cities every year. But the additional focus will be to add more on the tier 2 and tier 3 sites, because the penetration is quite lower in terms of the cities. So now we have a strong belief that the Go Color not only has a strong business model, but it also knows how to execute that business model. So now combining these 3 ingredients, the first is the strong industry and attractable industry. Second is the robust business model. And third is the execution capability. Now we will see how the company will be able to demonstrate the future growth and future revenue and profit matrices. So company at a organizational level now wants to focus more on the company operated model side, which is a EBO. So currently the 70%, 72% of the sales is happening through the EBO, and the company wants to take it to somewhere around 80% of the total sales. So that will help company to improve its EBITDA margin going ahead. Also, the company wants to mainly focus on the tier 2 and tier 3 cities side. Now, company has almost, if we talk about the top 8 cities of the company, so 58% of the stores are located in the top 8 cities of the India. Now, company wants to open new stores adjacent to the large, let's say the Bombay is a tier 1 city. So they want to focus on the cities which are adjacent to the Bombay, which is a tier 2 and tier 3 like Thane, Kalyan kind of tier 2 and tier 3 cities. Also, they want to geographically diversify into the western and north and east part of the India as well, because they have a huge demand of the consistent which they have seen in the western and the south part of India. Also, company will be focusing very selective on the LFS side, which is a large format stores, because the attractiveness of the model is also very low, and the company mainly operates the SOR model on a LFS side. So it becomes little bit of a high receivable kind of segment. So company wants to mainly grow to the EBO side around 80%, and company has targeted to open 120 to 103 EBOs for the next 3 to 4 years with the IPO that it has launched. And all this business outlook, if we convert into the financial matrices, so please move to the next slide. So company is targeting around 630 to 640 odd crore of revenue for this year. And going ahead also in the next 3 to 4 years, we are very confident that the business will be able to compound its revenue at around 20% growth rate. And if you look at the operating profit margin, so it will be somewhere around 31 to 32% range, and PAT margin will be around 13 to 14% range. So the idea here is that even the guidance is there, the execution capability is there, but the journey will not be like a smooth path. There will be always ups and downs in the journey of the Go Colors, from reaching from almost 400 crore to 630 crore and beyond that. But with the strong business model, we are confident that it will be able to achieve those milestones. But as a fund house philosophy, we also focus on some of the key risks that the business possesses, because we believe that risk and return always walks in hands in hand. So we will now focus on the second part of the business story, which is a risk. So some of the inherent risk which normally commodity businesses have. So because it's a B2C business, so it doesn't have those kind of risks, very low external risk. But there are some kind of risk which we think that one needs to focus on. If we so coming from the demand side, so as we have seen the COVID-19 time, so in such kind of pandemic time, any business will suffer due to the order delayed or the shop closed down. So this can be a one thing that one needs to look at. Also, the volatility in the raw material prices can put temporary pressure. But to just give more idea, like the Go Color has a full price transfer model and has full pricing power. So whatever the price hike is coming from, let's say the raw material like cotton, or let's say the transportation cost, they are able to pass on all the price hikes to the consumer without compromising on the product demand. Third is the execution risk. So it can happen that because of some internal delays happening, that the store expansion can, let's say, from moderate to 100 or 90 stores per year compared to 120 or 130 guided by the company. So that we need to look at. And the last can be some of the bottleneck issues coming from the distribution center side, like the two distribution centers which Go Color has built up, like one in Bhiwandi and one in Tamil Nadu. So there can be some sourcing risk or some kind of bottleneck across the supply chain. So we think that these are the major 4 risks that one needs to focus on the when we are going through the journey of Go Colors, almost moving from 400 crore to the 650 crore and at least achieving 20% growth for the next 3 to 4 years. Of course, we need to keep in the mind that the journey is never going to be the same. It will be always ups and downs and new challenges coming into the journey of reaching from almost 1,000 crore turnover in the next 3 to 4 years for the company. So that will be it from our side. And thank you for listening us. And we may conclude the session and move on to the Q&A session. Yeah, thank you, and over to you, Prabhu.
Thank you, sir. So the first question is regarding what sets apart Go Colors from TCNS Clothing or Aditya Birla Fashion and Retail. So what is its fair value? That is the question.
Yeah. So as we have highlighted, so Go Color has a very differentiated business model. Okay. So it has also finalized the store business model, which is very small if we compare with the large format stores. So he hardly operates on the 400 to 500 square feet kind of store side. And if we look at the sales per square feet, so it is the number which is the second highest in the industry, which is the 40,000 rupees per square feet. And so this is a clear like a clear differentiator for the Go Colors. Also, if we look at the product category which it offers, so it offers all the way from ethnic to western to the fusion, also athlete wears, and across the whole spectrum it has a product offering. So what we have seen, like some of the companies, like as in the mentioned in the question, those companies are selectively focusing on the ethnic side, or one company is focusing on the Western side. But Go Colors has been able to give all the different segments into the one umbrella. So that is a very one that becomes a one-stop solution for a consumer, and it also improves the product recall, because consumer, let's say, wants to buy Western wear or ethnic wear, they will go and they will go to the Go Colors and try to buy from that store over some other stores. So these are some of the two or three like different thing that we like. And anything you would like to add, Prabhat, on this side?
Yeah. So basically, what differentiates also is that, like, rather than covering the breadth, right? Like, rather than having a different sort of products, mainly like, top wear or winter wear or something else, right? So mainly it tries to cover the depth in the business, right? So mainly it has just captured one single market, right? One single segment, which is the bottom wear, and that's to just the women's bottom wear, right? So that's very specific to the BD business ideology, like, with which it operates. So it has just picked one segment and tries to, like, find out the maximum SKUs that it can present, right? So tomorrow, if has to, like, if somebody has to go and choose a bottom wear, so basically, like, the person goes to store A, then store B, then store C, like, if the person doesn't feel satisfied, so it moves from one store to another store just to doing the window shopping. But it has, like, made up its offering such that, like, it has entire range of products in just particular segment available, right? So it has just picked out a very niche spot for itself and tried to find out, like, the best designs, the best pricing, everything that it can do, right? So this is the main differentiator apart from the operating matrices. Like, it's the most profitable. If you look at the per square feet sales it's doing, that too in the not in the premium segment, right? So premium segment, it's very easy for somebody like Zara to do higher per square feet sales, right? Where the average selling price is more than 2,500 rupees. But here, like, when we are doing the average selling price, average sales price is, like, less than 1,000 rupees. And again, you are maximizing the per square feet sales. So it's very commendable, especially in the retail business. So I think that's the USP. Yeah.
Yeah, thank you, sir. So the next question is, how the company is going to keep in check with the rise in interest and inflation and market in general as well going forward.
Yeah.
Ye-
So
Yeah, Vijay, please continue.
yeah. So on the rising inflation and the interest rate side, so basically the company has a full price on model, so they can pass on all the price hikes, or let's say the which are coming from the raw material side, also from the transportation side. So company as we have seen, the company used to sell around the ticket size was around 550 odd rupees around 3 years back. Now it has moved to around 709 rupees, which is the average selling price. So similarly, whatever the additional price hikes will come from the raw material side, it will be again passed on to the consumer side. And the interesting thing, when we look at the fashion retail industry, so it is a very interesting thing. So whenever the commodity prices cool off, like crude oil is cooling off almost from 120 $130 to almost 76 or 75 level in the US region. So the reverse effect will not be transferred to the consumer. So whatever the price hikes have been taken by the Go Colors, so those will not be reversed. So people will get used to the higher prices, and later on when the raw material prices and transportation cost cools off, even then they can reap the additional benefit which is coming from the commodity side. So that is how the strength of the business model is, and it has been able to similarly take price hikes for the last 8 years. So we remain very confident that there won't be any volatility in the EBITDA margin or the profit. Maybe it can happen because of the, let's say, the 3 year or 6 month basis, because they are selling the older inventory. Once the new inventory comes in, they take a price hike, and the new inventory comes at a newer price. So there can be some volatility, maybe 3 to 6 months, which is 1 or 2 quarter, but it can't be more than that, because the new inventory will be at the newer prices. Yeah.
Yeah, just adding to that, like, since the company doesn't do its own manufacturing, right? So the promoter has very clearly highlighted that, like, they will chase only the manufacturers which can offer the best of the product at very competitive pricing, right? So then again, offset some sort of issues, like, they are just not just tied to any specific region or part of the country to sourcing the raw materials. So they can source pan India wherever, like, the supplier is available, and again, like, they can reach the best of the manufacturers to, like, have that quality product again. And if you look at the interest payout levels, right, since we are in a rising interest rate environment, so the company has done sufficient effort to bring down the leverage that the company has taken, right, around the COVID times, right. So the company has done a commendable job by reducing it to half now, and also, like, going forward, they will keep on, like, like trying to reduce it to minimal at the balance sheet level. Yeah.
Yeah, thank you.
And on the Prabhu, I think there was second part, right? On
Yes.
Yeah, what was it? Can you please repeat?
So regarding the valuation, no, I mean the market in general, what is the impact of the future rate hikes going forward?
Okay. So mainly, like, since we are closely following the interest rate hike commentary from the Fed also, right? So we like, even the prints have come down, and if you're following the crude level also, it has cooled down substantially. So what we feel like, whatever the stress was there, mainly because from the supply chain disruption and, like, all the protectionism that has grown in the wake of US. Russia-Ukraine conflict, so that has started to ease now, and again, like, all those commodity prices which have rallied in the first quarter of this calendar year, so that are expected to reverse going forward, right? So mainly from the quarter 4 onwards, we can see that at least for the Indian companies, right, will not see that much of pricing impact, because again, like, if you look at the average level of inflation print that was there in quarter 1 of this year, calendar year, so that was averaging around 6 to 7%, right? And since then, a lot of things has come down. Crude has come down, metal prices have come down. Again, like, normal palm oil prices and other commodity prices have come down. So we don't see, like, much impact happening, at least for the domestic market. And also for the global market, if you look at the recent print, right? So somewhere, like, the base effect has to come into play, right? Even if you go back and study the historically high years, right? So let's say the inflation remained high for a year or two, then after that, there was a prolonged period where the inflation print was very benign, when again, like, it was just around 1 or 2%. So let's say, like, Vijay has rightly highlighted, let's say what the companies, consumer companies, go for a price hike, they don't come back and, like, reverse the price hike, right? So what happens then, let's say, like, the price moves from 100 to 110, and, like, the raw material prices come down, so that will remain at 110 for, like, next 3-4 years, if the raw material prices doesn't make much movement. So 110 will not come down, but it will remain at the similar level. So that again, similar situation, we think, like, again play out, that okay, so the inflation, first leg of inflation has already played out, we see elevated prices, but if the input prices will come down, so then we'll see the similar level of prices for next 2-3 years also, right? So we don't see much impact of the prices unless and until there is a major geopolitical event happening again, right? But keeping things as it is, like, that we are seeing currently happening, unfolding, so we don't see much pressure. And again, Fed has also guided recently, very recently, that they will be very like, again, they were earlier asking, or, like, intimating for a very steep rate hike environment, right? So mainly 75% 50 bips to take it to 5%. So now they have toned down the rate hike guidance that they have given, and they have said that it will be gradual and not very aggressive, like, going forward, if they don't see inflation print coming that high. So that's the normal stance. And again, if we see, like, if that will be happening, then again, it will be positive for everybody. In fact, like, most of the companies that we have in our portfolios, because we are mainly the growth investors, and like, there's certain terminal value that's associated with the interest rate, or the terminal rates that's there in the economy. So if that will be gradual, and if that's expected to go down, the terminal rate, so that will again makes a case for the rating of the portfolio companies, right, that we hold in the portfolio. So again, that's a positive for us.
Yeah, thank you, sir. So some of the questions are more towards the valuation side, and taking into account the expansion plans they have. They're asking about how confident are we in it creating a new 52-week high sort of going forward.
Yeah. So is it more to the company related, or is it
The
more to
company's evaluation, so they want to know if how it is
Okay,
laid
okay.
out on the price side.
Yeah. So if we look at the company's valuation, so normally on the fashion retail or any retail business model, so there are different matrices that one can look at. So like one of them can be the EV by EBITDA, because the companies in the retail side, they invest aggressively on the new store side. So the new stores which are coming into the book, those are not operating at a first month at like a mature store. So those will be like in the loss for some of the time. Eventually it will break even into 12 to 13 months, and going forward they will start contributing to the positive cash flow for the company. So because of that, like the ideal way to look at any retail businesses, especially on the consumer side or even the grocery side, or let's say the sub segments like fashion retail or consumer durables, the ideal way to track you by EBITDA in our opinion. And one can compare it with the other industry players, how the other industry players are like in the same region or even in the grocery segment are located. So specifically for the Go Colors, we think it is a very cheap if we compare with the industry leaders like Trent specifically, which is our closest competitor to the women apparel market. And if you look at some of the other companies like wedding wear side, Manyavar, so it is again very cheaply, almost 40-50% discount on the valuation multiple side. So that makes us very comfortable, and it also offers a large margin of safety in case the things don't play out as the company and we are expecting. But given the execution capability and the kind of rebound in terms of business operations which company has gained post pandemic, so that is very commendable. And the profit and revenue both have hit the all-time highs in the last 6 months, so that makes us very confident that the business will able to replicate the strong business formula which they have mastered in the last 8 years going ahead as well. Yeah, so that will be it. Yeah.
Yeah. Thank you, sir. So the next question is, financials have outperformed in the recent quarter. Should one do profit booking, or is it a good time for a fresh exposure in financials?
Yeah. So if we look at the financial sector, so it's a very interesting sector. So the sector has been lagging behind because of multiple reasons, and because of the high interest rate environment, they were able to charge the higher, pass on the rate hike impact to the rate hike effect to the consumers and the final consumers as well. And because of that, we have seen the NIMs improvement across all the banks, and the valuations are quite reasonable for the most of the banks. But we need to be very cautious because the deposit growth is still lagging. So banks have two main functions. They also raise the capital through commercial paper or deposit side, and second portion is the lending part. So they are charging the higher interest rates from the consumers whom they have given the loan, but they are not giving the high interest, let's say the CASA, which is a current account and savings account. So still saving account rates are very low in our opinion. So one needs to be very cautious because those savings account rates will also start to increase, mainly also from the term deposit side as well. So one needs to be very cautious the how the banks are managing their asset side and as well as the liability side. So we have coming, the NIM expansion is mainly happening from the asset side as of now, but we also need to be cautious how they will raise the future capital and what interest rate. So one needs to mainly focus on the strong businesses like the large private banks, some of the turnaround businesses. Of course, I don't want to take the names, but there are reasonable large size private banks and even public sector banks which are turning around. So one can look at those stuff and also try to go through the some of the financials and the commentary from the MD and CEO side, how they are talking about individual businesses. But we are far optimistic on the large private banks and some of the large NBFCs from the MFI and MSME segment. So that is our stance on the finance sector.
Yeah, thank you, sir. So the next question is, as in-house, so what are some of the themes that you're bullish on, and what's the view on specifically the building material space?
Yeah. So normally on the house philosophy side, so just to give like a quick highlight. So we normally, whenever we are picking a business, so we are basically our investment thesis lies around 4 to 5 years of the business side. So how the business will look like in the next 4 or 5 years. Of course, there can be some setbacks where the company is not performing as we have thought, and we will also take the exit at a minimum cost. But our major time horizon or holding period remains around 4 to 5 years. And if we look at the some of the portfolio companies which we are optimistic, and also the sectors that we believe mainly coming from the paints, wires, and also the PVC pipe side, because those are the inherent sectors which have a strong pricing power. Also, there is a strong industry tailwind. If we mention the PVC pipe segment or the steel tube side, even if we are talking about the wires and cable segment, also the retail segment that we are currently discussing in this session. So these are some of the sectors which have very strong tailwind, and also some of the key even separate entities or separate businesses which are operating from the medical space or medical manufacturing side can be also interesting. And we also like some of the companies basically coming on the manufacturing side as well. So these are the like 4 or 5 different segments which we like, and we think that they can again bring out the next cycle multi-baggers.